In the U.S., stock index futures posted gains ahead of Friday's open. Investor anxiety surfaced earlier this week after minutes from the Federal Reserve's latest meeting revealed that members saw an uptick in inflation and increased economic data as reasons for the central bank to continue raising interest rates gradually, while Wall Street appeared to shake off some of the concerns on Thursday. Fears surrounding high rates are expected to linger, with little economic data scheduled to be published on Friday. Investors will be awaiting key remarks from leading members of the U.S. Federal Reserve. A U.S. Monetary Policy Forum will be taking place in New York, where 4 major Fed officials are due to speak on economic policy in front of other policymakers, academics, and market economists. In corporate news, Royal Bank of Canada, Public Service, and Cinemark are all due to publish earnings update. And in Asia, stocks closed higher on Friday as the dollar edged higher after slipping in the last session. Gains in the region were led by South Korea's Kospi, which bounced back to rise more than 1.5% after slipping in the last session. The Nikkei 225 edged up 0.72%. In Sydney, ASX 200 tacked on 0.82%. Meanwhile, Hong Kong's Hang Seng Index rose 1.13%. Markets on the mainland closed with moderate gains. The Shanghai Composite rose 0.63% and the Shenzhen Composite reversed earlier losses to close higher by 0.18%. And back here, Mozambique will present its creditors the key elements of a debt restructuring proposal and give an update on its fiscal and macroeconomic situation at a meeting in London on March 20. The Ministry of Economy and Finance says the government remains committed to finding a consensual and collaborative resolution to the current debt situation through dialogue with the holders of the Republic's direct and guaranteed external commercial obligations. Debt ridden Mozambique has been in turmoil since the 2016 discovery of previously hidden loans granted to 3 state-owned companies, which led the International Monetary Fund and Western donors to halt budget support, triggering a currency collapse and debt defaults, as well as hitting economic growth. And the African Export-Import Bank will attract $1.5 billion to Mauritania to finance development of trade and related infrastructure under the terms of a memorandum of understanding signed with the country. The bank president, Benedict Orama, says the MOU was aimed at strengthening economic cooperation between the bank and Mauritania, one of Afreximbank's member states. According to him, the bank saw opportunities to support Mauritania's strategic plan for accelerated growth and shared prosperity through the financing of key projects it had identified in the agri-processing, fisheries, hotel, construction, and related logistics and infrastructure sectors. And Djibouti has ended a contract with Dubai's DP World, one of the world's biggest port operators, to run its Doraleh container terminal. Last Friday, the London Court of International Arbitration cleared DP World of all charges of misconduct over a concession to operate the terminal. In 2014, the president of Djibouti lodged complaints accusing DP World, majority owned by the Dubai government, of illegal payments to secure a 50-year concession for the Doraleh container terminal. The president's office said the contract was ended after the failure to resolve a long-running dispute between the two parties that started in 2012. And the Kingdom of Netherlands is Nigeria's 4th largest trading partner and 3rd biggest investor in the country. Ambassador Robert Petrie reiterated this position during his visit to the Nigerian Stock Exchange in Lagos. In an interview with Channel's business producer Temple Shaju, the ambassador explains how the Netherlands plans to support Nigeria's agriculture reforms.
I thought it is important to visit the Nigerian Stock Exchange. I think economically, Nigeria is a very important country. There's a lot of economic activity. And of course, you have to know what goes on in the Nigerian Stock Exchange to get a good impression of the economic activities that are taking place here in Nigeria. I think Nigeria is an important country. It's huge. So it's an economic powerhouse, as a matter of fact. And if it goes well in Nigeria economically, it goes well in the rest of Africa. So it's very important. And of course the Nigerian stock exchange plays an important role. If more companies are at the stock exchange, then you know that attracts capital of pension funds and also private investors, and it generates economic activity. And as we all know, that's needed to create more jobs, employment, and that's important. And that's why I'm here, to see how that functions. And yeah, I discussed also with the chief executive officer what we could do in furthering our collaboration in this field. Yes.
So do you have any exciting news for the Nigerian capital market, the private sector, as well as the public sector generally?
We are very much engaged in this country, the Netherlands. We are the third largest investor here and the fourth largest trading partner with Nigeria. We would like to step up our cooperation, and I'm here to see what we actually could do, also with the stock exchange. And I think there are opportunities to more deepen our collaboration, particularly in the field of agriculture. As I said, you know, agriculture is a priority for the Nigerian government. We are basically in the Netherlands an agricultural country. The agriculture is the backbone of every economy everywhere. And I think then maybe the agricultural sector has been neglected a little bit because of the oil. But I think there is interest now to look again, take a closer look at the agricultural sector, and we are willing to be part in that. We have expertise to offer. We actually are already helping, are working together with Nigeria in two areas, actually, with cashew nuts and sesame oil to improve quality. And this is being done through a center for the import of other countries, the CBI thing, and this is working very well.
After the break, more on Nigerian economy. Do stay with us.